Good morning, friends. So we just wanted to start something new where we did like a weekly roundup on the trades that we took during the week. We won't cover all the trades that we're in just because that would be very overwhelming, but we will talk about the trades that we entered and closed during the week and the trades that we have closed. So this week was a banger of a week for us. Most of our systematic trades ended green and they hit all of their scalps. And of course, those that like to hold till end of day to see if they get those asymmetric risk reward, they came out very excited this week. You can see from our Discord that our trades just performed exceedingly well, hitting multiple hundreds of percent. So many of you already know that we have a number of systematic trades that we take. And for this week on Monday, so one of the rules that we have is for people that are trading smaller accounts that they should take scalps in order to kind of compound their returns until their accounts are a little bit more stable in order to allow trades to bake longer. Because with a lot of short selling strategies, you do end up getting that higher return on your risk if you are able to hold the trades longer. But in order to build consistency, to build conviction in the trades, we ask people to consider from the beginning just taking their scalps. So all of our iron butterflies hit their scalps, whether you were taking the $1 scalp or the 10% scalp, according to your rules, as did all of our short puts. They decayed at least to the 70%. So with short puts, you are selling to open and then buying back to close. So we tell people once we've kind of hit a 50% decay on those positions, you should just put on a stop loss. And then that way you're not worried about them. Either you'll close at a 50% return, or by the end of the week, by Friday, you will hit 100% decay on those strategies. But this week, those that can't manage the trades, but have large enough trades to be able to cope with holding the trades longer, our Monday midday trade hit $805. Our Tuesday trade hit 1,005. Our Wednesday hit over $3,900, and our Thursday trade hit $1,100, and our Friday, if you did hold till end of day, was negative $600. But altogether, you had accumulated well over $5,000 for the week. And then we have a second trade that follows up or partners with our midday trade. And those also all hit max profit. So then that meant that for last week, you could have easily, if you had held till the end of day, you would have easily been able to return about a $9,000 return if you are only trading one contract. Now, for people that have accounts over $25,000, then they may be taking these trades in multiple contracts. Of course, those that have accounts over $50,000, they're likely trading these in multiple contracts. And you can see that in the Discord. Even if you are in the free section or the public section of our Discord, you would see all of the share your wins where people participate in sharing returns on their trades. And for many people, they are trading multiple contracts. So then we also had a number of discretionary trades that we were able to close this week. And let's just see what those looked like. So I do want to show you how we kind of signal to the group on the trade management. So under daily calls, we give you all of our opens of trades that I'm taking. And then in trade management updates, we tell you maybe how we're adjusting the trade or we are closing the trade. So this week, we just had some massive runs on a significant number of underlyings. So let's just look at those quickly. So we had longer duration trades that were coming to a close this week on things like Snowflake. We had a long call butterfly to be able to take advantage of this up move. APLD, we also were expecting the squeeze to the 20. And with SOFI, we were also pinning to the 30, and we have been in this trade building up the trades all the way up. And QBST, QBTS as well, we were looking for this breakout move, which obviously came in this week. And then also Oscar, which I don't know why I don't have the chart already up. So okay, I guess TradingView wants to take a second, but we can actually go back to the Discord and you can see the returns. So we had a number of trades on because we had been building, like layering in to this situation. So, we had already had lots of trades on QBST. Now, QBTS was actually one of our trades was still flat going into this week, but obviously with that massive move, we were able to capture some significant returns. But our trade on snow hit 250%. As I said, that was a long call butterfly. And our trades on APLD, which we were looking for, and you can see we were looking for a squeeze to the 20. That returned a 160% return on BMNR. We also hit that pin. So we were looking for a move to the 61 strike for this last Friday. Of course, we went a little bit beyond that. We did go to the 62.50, but our trade was up 200%. And often we are in these in multiples. So we are kind of layering into the trade as it goes along, and people can take their profits. With SOFI, as I had shared before, we had really been focused on that move to the 30. So every kind of time that SOFI was moving up, what we were doing is basically we were sitting in long calls that were down at the money at the time that we entered them. So like in this trade, you can see that our long call is at the $18 and our short position is at the 30. So essentially, as we're building out long calls, we are then selling those further out the money calls and also for shorter duration so that they kind of expire out the money faster. What that does for us is that basically allows us to compound our returns, and it cheapens the entry on the inception. So as you can see, we actually entered this trade earlier in September. And so we've been in this trade only for a few weeks, but it has performed exceedingly well because we have moved quite quickly into that 30. We also had other trades where we had the calls also at the 18 strike, and that was back in June that we entered those calls. And we had short positions that were expiring last Friday that were actually at the 20, but we actually had rolled those out into a similar structure as this. So by allowing those longs to stay in the money and just be selling short calls against them allows the position to give you those massive returns like 1,200 and 170 and 170%. With Oscar, we were also looking for that squeeze to the upside. We were really looking for a move to the 20. And you can see here our position was up 350% and we closed them. So one of the reasons that our trades just hit those multiple hundreds of percent return is because first we're focusing on catching those squeezes, and we use gamma structuring to be able to do that. And for those that take the trades, they know that what we're trying to do is we want to buy long positions that have time on them. So we're not trying to say, I know for sure that the position is going to pin on this date, though our pin rate is extremely high, but still you want to be a little bit cognizant of the fact that, we're human beings and market dynamics can change. And we are very overextended in markets right now. So, a lot of people will go long, they'll buy a lot of duration, they'll pay a lot for their contracts, and they do have to wait for 6-7 months to go by in order to hit 200%, where we are looking at getting long positions that are closer to the current price, have that higher delta on them, and are able to participate and get in the money or deep in the money really early on, but being able to get those call positions for a relatively cheap price. So when you are buying long calls or long puts without having any short position surrounding them or creating a custom position, you end up significantly overpaying for your options. That's why you end up having to be concerned about things like volatility crush or needing the price to just make a massive move in order to finally get in the money because you're buying calls way out at like the 20 or 10 or 15 delta instead of being able to buy your calls at the money. So utilizing these long short structures really support you for those who aren't in the Discord and are watching our weekly review. So again, those are all the positions that we closed for this week, and we are currently in a number of different positions. As you can see with our systematic trades, we have weekly short puts. Those have all expired out the money. We do have 2 remaining strangles that are still on, and we have our weekly calendars and diagonals. This week, actually, because we had a put diagonal set up for that FOMC date, for the people that closed their position on the FOMC date, they had a minor return of about 30%. 40%, depending on what their closing price was. But for those that wanted to sit through until the end of week to see if we got an OPEX drop, then this position actually did go to about a minus 60%. So we did manage this trade for those that decided to stay in the trade longer in order to mitigate the loss. So this trade will actually end up closing flat because of how we managed it. If you want to learn how to manage your trades so that you're not closing for losses, then that's also something that we teach. So we have a number of other systematic trades that we take week in and week out. And as a group, we are always studying new systematic trades. Our aim for any systematic trade is that you can kind of put these trades on and you don't have to manage them very actively because you know what the parameters of all of your trades are, and you are aiming to keep the trade at a 90% or higher win rate. And how we monitor that is that in any 2-week period, you should not be taking more than 1 loss. When you are taking more than 1 loss, then we have to go back to the overall group and see if other people also took extra losses that we hadn't. Maybe not everybody took a loss, and then figure out what was the divergence. Was the entry not the same? Was there a mistake maybe in the strike prices? Did the person maybe enter too late in the trade? Things like that. Because obviously, if we're all trading the same systematic trade, then we should all be entering and exiting around the same potential price, and we should be seeing the same win rate. But often there are minor divergences. We can talk about them and then figure out why those may have existed. So anyways, for those who are trading with us, congratulations. This week was an extremely profitable week. But one of the things that I keep telling you guys, for those who are trading with us, be sure if you are trading any of our gap fill trades, that you need to already have your take profit already in the system, because as you see, for a lot of the downside gap fills, those can take a really long time to fill, but then once they're filled, then we get a massive change in the direction, and the move can be just too fast to be able to enter your closing trade. So you want to keep that in mind so that you're not just kind of cutting down the returns on your wins, or actually end up taking losses because you weren't able to get out of the trade fast enough. But other than that, I think that everybody had just an extremely successful week. You can see that in share your wins, trades like on Affirm, butterflies closing for $650, other trades closing for 3K, trades closing at 610, trades closing here you can see, so that you can see the buy to open and the sell to close to $300 on the butterflies. We had some other trades going on Intel. We talked about that as a group. It wasn't an official call out. So congratulations to Chris, who entered that on his own. For a lot of people that don't know, we often talk about potential trades. So I give you things like in my weekly updates where you can look at the chart and then try and take advantage of a move, even if we're not in that trade as a group. It allows you to look at your account and say, oh, I don't have anything in financials. Maybe I can set up a trade on Visa, or maybe I already have 5 or 6 trades in financials, so I don't want to take a trade on Visa. Um, some people with smaller accounts, they really like the smaller cap trades on things like Rigetti or um, on APLD or some of these other trades. But we've called out really clearly trades on MBD, on Oracle. We had perfect pins set up, same with CoreWeave. So this just allows people to kind of take trades on their own, to use the education and then do what they want. So for those who are new to the Discord, welcome. Hope you see things that you might not have understood what they are, and then this kind of helps give you feedback. For those who are just learning about the trades, I hope this does give you a sense of confidence that our hit rate is strong, and that we are doing this every single day, multiple times a day, and every week, week over week. And if you ever have any questions, just feel free to reach out to us, because somebody will get back to you. And if you're already in the public section of the Discord, you can always ask a question. Everyone in the Discord can get back to you. All right, friends, I hope you guys have a brilliant weekend, and hope to see y'all in the Discord to get busy with our trades for the next coming week.